Bitcoin price drops below $63,000 as U.S. jobs data raise recession fears. Joel Frank last updated August 2nd, 2024 at 2022 GMT 33 minutes read. Bitcoin BTC price plunges briefly back below $63,000 as weak U.S. jobs data triggers recession fears. Source: Cryptonews. The U.S. employment rate unexpectedly jumped to 4.3% from 4.1% in July, triggering a sharp drop in risk assets on Friday. This caused the Bitcoin price to plunge briefly below $63,000 as U.S. recession fears rose. After briefly falling to $62,300, the Bitcoin price recovered to $63,000 as U.S. equity markets reeled. The weaker-than-expected headline U.S. jobs number showed only 114,000 jobs added to the economy in July, falling short of the projected 176,000. However, the unexpected rise in unemployment stole the show, prompting concerns of a potential recession. Economist Holger Zschaepitz highlighted the significance of this jump, noting that the Sahm Rule Recession indicator rose to 0.53%, 343. This surge indicates a heightened probability of a looming recession. With recession fears growing, U.S. government bond yields plummeted as traders increased their expectations of a more aggressive rate-cutting cycle from the Fed. Data from the CME's Fed Watch tool now suggests a greater than 70% likelihood of the Fed implementing a 50 bps interest rate cut in September. Why are Fed rate cut bets not positive for the Bitcoin price? This recent market activity begs the question, why haven't rising expectations for Fed rate cuts translated into positive momentum for the Bitcoin price? Typically, such expectations are viewed as a positive catalyst for Bitcoin. However, the current situation deviates from this norm. The underlying reason for the Fed's or potential rate cuts holds significant weight. Rate cuts aimed at maintaining a balanced, non-recessionary economy would likely benefit risk assets like Bitcoin. Conversely, if overly tight financial conditions and a looming recession force the Fed into rushed rate cuts, this presents a less favorable scenario. This misstep from the Fed has the potential to harm the economy. Consider the impact of the Fed's actions in 2021 and 2022. Allowing the economy to overheat in 2021 led to forced sharp interest rate hikes in 2022, ultimately harming Bitcoin. Similarly, maintaining excessively high interest rates in 2024, potentially leading to rushed rate cuts, could also negatively impact Bitcoin. Where next for Bitcoin? Until recently, the prevailing market assumption was that the Fed would achieve a soft landing, controlling inflation without triggering a recession. This assumption previously allowed rising expectations for Fed rate cuts to bolster risk assets, including Bitcoin. However, recent data challenging this narrative have made the outlook more complex, potentially increasing downside risks for Bitcoin's price. Bitcoin currently faces additional challenges. For example, U.S. Vice President Kamala Harris's implied probability of winning the November presidential election has increased. Crypto markets appear to interpret this as a negative sign, given former President Trump's perceived pro-crypto stance. The looming supply overhang from the U.S. government and Mt. Gox creditors adds further pressure. Should support at the 50 and 200-day moving averages $63,100 and $61,300, respectively, falter, a decline below $60,000 is possible, potentially leading to a retest of recent lows around $53,000. Lower interest rate politics to power BTC price rebound. While a U.S. recession could initially hinder Bitcoin's price, assuming its demise would be premature. Although recession fears may initially pressure Bitcoin, lower interest rates could ultimately fuel a significant recovery. Consider 2020, when global central banks slashed interest rates to zero to support economies ravaged by COVID-19 lockdowns. Despite an initial decline, the Bitcoin price mounted a substantial comeback in late 2020 and into 2021. A sharp decrease in Fed interest rates could inject liquidity into the market, potentially fueling a robust Bitcoin price rebound. Other factors could contribute to a potential rebound, The upcoming U.S. presidential election could significantly impact the cryptocurrency market. While former President Trump is generally viewed as pro-crypto, many Democrats advocate for more crypto-friendly policies within their party. This suggests a potential shift in the U.S. political climate regarding cryptocurrency. The halving significance. Also, consider the impact of Bitcoin's recent halving. Historically, Bitcoin has displayed a tendency for substantial rallies, often reaching new highs approximately 6 months after each halving event. The next 6-month mark falls in October. Follow us on Google News.